Happy Friday, everybody. It is 8 a.m. Chicago time on Friday, the 29th of September, 2023. This is episode number 2547, 2547. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Welcome to Friday. Welcome to the end of the month, end of the quarter, and end of the downtrend in the in the indices on a daily time frame, that is. So that's where we stand this morning. First things first, I know I've skipped it a couple times here in the last few weeks, but let's get this going here. It is Where Are You From Friday? Where are you from Friday? Just take a moment to type in what city, state, country you're from and provide your Twitter or Instagram handle for those around you who might want to reach out. If you feel like having them reach out, please do not post your email or your phone number. It will be mined and you will be scammed. So just type in city, state, province, country, and if you want to get contacted by people, fellow traders in the area or nearby, or those who want to set up kind of a meetup or whatever, do it at your own risk. Then you can include your Twitter handle or Instagram or some other non-identifying handle that you can where you can block people. So let's take a look at the conversion trading pre-market summary sheet this morning. Very clear risk-on sentiment. Europe really taking a turn this morning. This was led, of course, by the U.S. yesterday on that rally. We saw that coming. Saw it coming too early 2 days ago. And it finally came to fruition. But this morning, the overnight risk posture is risk on. Don't have much in terms of key earnings this morning. French and EU inflation lower than expected. That's very positive. Italians higher. US PCE lower than expected. This is very important news here. US PCE came in. PCE, the core, came in at 0.1%, was expected at 0.2%, the prior 0.2%. The PCE price index, which is an important component here, month on month came in at 0.4 versus 0.5 expected. Price index year on year came in at 3.5% in line, and core PCE price index came in at 3.9 in line. We also got the wholesale inventories number, and then we're left with Chicago PMI, which, as a reminder, is a private number, and it is released to customers at 9:42 Eastern, to the public at 9:45. So it comes out, the move from that, if it's off, comes out a little bit earlier than when we hear it. Again, end of month, end of quarter today. The close today, be careful, please. There is expected to be some volatility there. Usually is the end of the quarter. Overall, trend lower in inflation data. The U.S. government shutdown is all but a certainty now, and the UAW is expected to expand auto strikes. Not very helpful. So that's where we stand. We do get Michigan sentiment final. This is the final number, not the prelim. It's not likely to move us, in my opinion. And then Feds Williams at 12:45, and then we wrap up with the Chinese MBS manufacturing PMI at 9:30 this evening. I am in Chicago, Illinois, USA. Looking at the S&P, the S&P is in a multi-distribution profile. Currently, the market condition when it's a multi-distribution profile is what's called price discovery, active price discovery. The volume is again high, 294,000 contracts traded in the overnight session. We've had high volumes in the overnight session almost every day this week. The inventory is 69% long-ish, so it's 69% more volume is above the close than below it. That's what that formula is. And the range is 42.25 points, which is quite wide. So that gives us a strong potential for some opportunity, in my opinion, in today's trade. The point of control shifted to 43.55. The market has reached 69.75 overnight. 67 to 65 is key up here. 65 really. I'll go over that in a minute. Here's what was expected. If you recall, this was 2 days ago. 2 days ago, we came in. We had bounced up. We had a relatively bullish overnight session. You know, we traded above we held above the inventory is 100% long. We held above the 43.15, 14 area. That's where the point of control was for the prior day, and we talked about 43.22 being an important reference for the session, and the expectation was 63. 63.65 is really the number. 63.65. That was 2 days ago, and guess what it did 2 days ago? It went up a little bit, and then bleep, bloop, bleep. It ended up breaking way down below the 4,300. So did not work that way. Came in yesterday. Here's what was expected yesterday. We put in an excess low. I talked about this quite a bit, you know, a couple of seconds before this. So this is 26.35. There it is. I talked about the excess low and how important that is to see and to recognize an excess low, because an excess low tells us that buyers are coming in and they're very serious about the business that they're doing, and that's relatively bullish behavior. So the expectation yesterday is to open. We were at 43.06 to push towards the 4,300, and then to take a bounce. So that's what we were looking for. What's going on here? That's what we're looking for. Pull back to 4,300-ish, and then take a bounce. And then the numbers for yesterday's, as far as yesterday's plan's concerned, let's move forward. Here's the plan for yesterday. The plan was take a bounce from 4,300 right here, tackle the 43.15. Look to take out the high and the excess at 31. Then we're looking for 50. And then we're looking for 63.65. Right? And then this morning we hit that 65. We're trading at 65. Where does the 65 come from? It's a price action high. It's a price action high. Yeah, it's a price action high right in here. Boop. Right there. This is the 65. Tested, break higher, break through, retest from below, break down, break through, retest from above, retest from above, retest from above, probe, come back up, and then we gapped lower. So this is a tough area, and here's what it looks like now as we push into it. Coming into this session, we immediately notice that there are tons and tons of collisions. There's just a lot of collisions. And what this is saying is it's very likely that you know, it's coming into the end of the month, so this is not surprising. But they're lifting and colliding into these prices. I believe I know. This morning I noted in the Convergent Trading Mavens channel, I said that if you're long, where did I put it? Yes, pushing very clear retest, seeing a collision, da-da-da. Also the metrics for the session as far as okay, I'm not seeing. Yeah, note this area here in the 65, 67 has a fair amount of price action resistance potential. If long, this is a good area to lighten up, in my opinion. It's not. We're not seeing an excess here. We could see that we've built multiple distributions. We've built multiple distributions, right? And we're not moving away. We're holding tight to the upper end of the range. We're already at 1 vol sigma here. So we're already quite extended range-wise. So today we do have a lot of indications. One, we've covered the expected days range in the overnight range already. We're at 1 vol sigma. We have strong separation between the overnight levels that were built. There's separation between the overnight point of control and those levels. There are multiple distributions here, and so overall we have a market that's in an active price discovery, but it's got a bit. It's got as it turns down, there's a fair amount of room to the downside to retest. Where are we on the bigger picture? On the bigger picture, we're pushing in. I thought I drew it in here. That's kind of odd. Interesting. Anyway, I had a resistance zone here that disappeared. I might have erased it by mistake. But here's that area between 63 and 65 that I was talking about. And you can see, again, this is built on price action here. Up, 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 up. It's not a volume based, not quite a volume based. Behind that, if we clear the 67 and hold on the open, behind it we have a naked point of control at 70. And then we're working into the upper distribution. So with this, what we have to do now is draw us a volume profile that consists of this particular balance area before the gap down, like this. Okay. So active price discovery in this area. The next area up is 44.05. Up here, the point of control. But you could see there was a fight all the way through this entire range. So we've had our bounce, right? Let's look at the ES-TPO chart. We've had our bounce. We've pushed through the 31.75, the 54, the point of control. Overnight is in this area here. Is at 55 right here, right at the high of yesterday. And we're at 66. So to me, there's a fair amount of support underneath the 55, 54 area. Presents a fair amount of support. Then you have the 50 century figure. So anything for most participants, in my opinion, any push down is likely to provide an opportunity to get long and to look for, and we're already at this high volume area, to look for to hit that 70 and VPOC and to get back into that 83 area above. Okay. So that's how it's where we stand today. Not much more to say about this. This was forming. I was talking about this is really trying. It's overextended and it's trying to form a bottom. If you go back and listen to Tuesday's video and yesterday's video, I talk about this before it happened. This is really struggling when you have the point of control kind of sitting on top of each other with price action moving. This is why I don't use price action alone. Price action alone doesn't tell me much. You know, looking at a candlestick and saying, oh, it's got a wick of this and a doji of that and a hammer of this and three little soldiers and whatever. That's not enough. There's nothing wrong with it. It's just not enough. What we have to see is where did the battle occur, and that's where volume profiling comes. And if we want to see where the battle occurs in terms of time, organized into 30-minute brackets, then that's where market profile comes. So now we've shifted what was a falling boop boop, right? So let's follow the point of control. There's that. There's this. So we don't fade this. There's this. And then now we're starting to go, okay. Closing at the point of control, opening higher. This is looking like it's starting to run into a wall. The next day, point of control sideways, and then the point of control higher. So even though price went lower, is my point, Tuesday, Wednesday, value did not. Value just remained the same right in here. Okay, so that's, I gave you the primary scenario. Look at NQ. NQ is relatively stronger. NQ is really ready to push through. NQ has some pretty distinct support zones here that you might want to note. The NQ's 50 is important right in here. This 50 zone right here. And the NQ has a bit of a double top that it's kind of teasing here at 15.020 and 15.025. This area here is where the NQ is very likely to, if the NQ pulls back today, find some support. This is going to be your key exit. Expect it to push through and expect it to spike, hold, and then now you have this gap zone, poor structure zone to play with all the way up to 15.150. 15.150. And I'm kind of rounding up or down to say 5 points or something. This product's a little bit fast. But that's what I'm looking at for the primary scenario. The secondary scenario is it tries higher, becomes responsive. We have an impulse down. If it becomes responsive and it's grinding, I'm not interested. Has an impulse down, starts pushing towards that 14.940 area. So 45.40 here. Expected potential support here, potential long. Back in, and then we have a sideways market. Not expecting it to fall through. You have a sideways market, and it's till the last half hour or so of trading, and you have your end of month song and dance occurring, end of month, end of quarter song and dance occurring at the end of the day. Crude is in an interesting condition here. Crude, as you recall, has been in this beautiful balance zone, right? And the expectation was it's likely to get down in here, 87.50. Clear these two balance days back here and get down into 87.50, retest the top of the next balance zone. And it didn't do that. That was wrong. It ended up popping and finishing higher. Then yesterday, what it did is it opened against this thin part of the range, tested higher, could not get the point of control. That's significant, and then started turning down. So yesterday the target would have been the 91.87 low from the prior session, and it would have been what? It would have been the top of balance, which is your composite low volume node, and that area is, believe it or not, 91.30 to 91.25. Do you remember the 91.25 from earlier this week and last week? 91.25. We've been toying with that. Yesterday it pulled right back to that, and then today we have an inside day with the market opening at the upper end of the range, ticking up 3 ticks and then pushing down. So we have an open rejection reverse or an open test drive, seeing driving behavior. So to me, crude, you don't want to be long crude today unless it crosses and holds the mid, and it looks like it is go to the 91.85 again. That's what crude is shaping up to do as a primary scenario. So I'm not really interested in the long side. If it gets to 91.85 and holds it, then you're looking at an inside day and crude starting to form balance up here between the 91.50, 91.30, all the way up to 94, and then we'll get the next leg after that. If it breaks through this 91.85 area, then it's very likely going to retest the 91.25, 91.25, and if it clears that, then it just gets down the valley and up the hill, and now we're looking for 90.50, and that brings it into balance. This is going to put a lot of pain on the longs all the way up to 94. People are going to just start kind of dumping, but it looks like it wants to come back to balance. It tested it. If it holds steady in here, you're very likely to get a couple days of balance in here before the next leg to retest that 94 up. Okay, good luck, and remember, it's Friday, end of month. Please pay attention to the end of the session, and it's very, very likely to be volatile at the end of the month. You know, people have to change their positions, and in doing so, they have to hedge those positions, and so there's likely going to be action in the futures. We have a lot of range already across many products. The relative range has been really high. Relative volume is pretty good so far, so pay attention this morning, shut off all distractions, and focus on the markets. Good luck, and I'll catch you on Monday. Take care.